Good morning, traders. This is Michael coming to you from Gamma Edge on Monday, June 16th with our pre-market prep strategy session. As always here at Gamma Edge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model, which is based on the tick index. You can research that at your favorite investing website, but the quick takeaway is it is buying versus selling within the overall market. The key indicator that we want to look at here is this bolded white line. This is our instantaneous intraday cumulative tick, or CT as we refer to it. As the session on Friday, we saw that a significant amount of selling came in starting around the noon hour. Obviously, news coming into the overall market, geopolitical stuff. So we saw significant selling come into the overall market. Obviously, the slope was to the downside, indicating more selling versus buying. We did see the filtered cumulative tick. This is plus 1,000, minus 1,000 block orders. We did see larger institutions and market participants start joining in the selling, as denoted by being below the zero line, and then a 45-degree slope to the downside, indicating a large amount of selling. This is the first day that we actually saw in our breadth indicator new lows outpacing new highs, obviously for the afternoon there. On the look back period here, multiple days, we continue to have new highs outpacing new lows, but this is just indicating that more stocks were being sold than bought. So cautionary into the overall week this week as of the news and a significant amount of selling that we saw on Friday. And then the other indicator that we like to watch is this colored rainbow ribbon, the red above cyan, indicating a longer look back period. Market participants are positioned bullish with a positive slope. So if the bolded CT starts crossing into or meeting this colored ribbon, we again start to turn a little bit more cautious on the longer term look of the overall market also. So we'll continue to monitor this day over day. For the bulls, you want to see the bolded CT stay above the colored rainbow ribbon, or at least touch and start to reverse back to the upside. And for the bears, if we're going to see continued selling, we'll see this bolded white CT start dropping into this colored ribbon, and then eventually below if we're going to have a significant market trend overall change. Moving on, the SPXA, these is our cruise ship. Longer term expiries, these contracts do not turn over as rapidly. Obviously, we monitor the SPX options complex because it's the largest and most liquid, to get an overall view of where market participants are positioning. As of now, we're still call dominated via the SPXA. We do see the net delta, green net delta above and below spot price here, so really not a significant amount of overall positioning change by larger market participants. We do have expiry coming up this week, so where that money gets deployed most likely will be a trajectory on out through the overall summer. So we'll watch that to see if we see any structure or sentiment change via the institutions or larger market participants. Moving on to the SPXP, all expiries turned on as denoted by the purple tiles over here. We're call dominated above and below spot price, but if you'll denote, we have seen a significant erosion in the net delta. Basically, this is just the out of the money call speculation erosion, and the in-the-money call speculation below spot price, exposing these red net deltas, which are in-the-money puts above us, and then out-of-the-money put speculation below us. If you'll do any review of the multiple pre-market preps we did last week, we did see a significant amount of green net delta above and below spot price as we started the week, but then started to see an erosion towards the middle and the end of the week. We denote the JPM hedge down here, short call strike at 59.05. Could be a magnet if we see a significant amount of selling come into the overall market, which would also be a large round number. That would be a good area for some supportive type action on any pullback. So again, we'll watch those areas below us. As of now, GEX and DEX transition, we're looking like we're going to open slightly above the DEX and GEX transition on all expiries, roughly 60-15 at the time of this overall video this morning. Moving on to the SPXP GEX ratio, we've discussed this extensively the past week. This is a put call ratio that is improved with a time component, which is gamma, and we've seen the short dated call gamma continue to leave the overall complex, which gives us a down sloping in the GEX ratio towards that one level. Again, that one is the theoretical balance point between calls and puts, so we'll continue to watch that. As if we drop below the one, then that would indicate that short dated put gamma is starting to control or possibly take over the overall complex. So if we stay above 1, then the call speculators and short dated call gamma are still maintaining overall control. Obviously, we saw the spot price continue to erode into Friday if you're a bull, and then if you're a bear, you saw the confluence of the GEX ratio finally playing out with a drop in the overall spot price or price depreciation. Moving on to the delta balance for the SPXP, as you would expect, you see these dropping lines of the delta balance. This is basically just telling us the overall positioning of the options market via the delta of the options contract. We separate this into the right-hand plane and left-hand plane. So right-hand plane is the green dotted, left-hand plane is the red dotted, below spot price, above spot price, and the aggregate is the delta balance. So again, as a spot price continues to drop, you see an erosion of the out-of-the-money call speculation, and also in the money calls continue to erode also via either mechanical closing or spot price dropping, as those are spot price sensitive. We do see some weakness continuing with the overall market through the end of the week, and then a slight rebound, obviously, towards possible beginning of next week after the overall OPEX and expiry. So we'll continue again to watch this day over day to see if we see any improvement in the delta balance. Would indicate that out of the money call speculation is starting to return and the put speculation is starting to drop some. But as of now, we do see some weakness continuing within the overall structure and sentiment via the delta balance. Moving on to the SPX P0 DTE, this obviously is the dated contract for today and how we'll look for overall positioning and game plan. Heading into today, we do have a large IC, asymmetric IC that we've outlined here. I think these legs will be extremely important today as we traverse the overall structure. A quick takeaway here is the GEX and DEX transitions as denoted by the white and blue. The GEX transition is extremely large, indicating a significant amount of uncertainty, and the DEX transition is narrow there at 59.95 and 60.10. As of now, projected we're looking around 60.15 to open, so that is slightly above the overall transition areas, but dropping into the transition would be most likely. The drunken sailor range is 59.70 to 60.10. Again, low exposure areas where we'll be at the mercy of the intraday volume speculation and intraday market participants. So again, if we start to lose the top of transition, pull back towards that 6,000 level, and then below 6,000, we'd be looking for 59.70. Below 59.70, we'd have to see a significant change, obviously, in the structure and sentiment to the downside. We are put dominated heading into today, so starting from a place of weakness overall. If we do get above that 60.25, 60.30, we could turn to call dominated, as we only have negative 1,000 on the net GEX. So we could possibly turn call dominated, but we'd need to see a significant amount of out of the money call speculation come in to drive us higher, as in the money puts are controlling the overall complex above spot price now, as denoted by the negative net delta, as well as as the negative net delta, the in the money puts overhead. You also denote that we do have some in the money calls below us, down below the overall drunken sailor range, and then towards this 5,900 level. And then obviously this is the lower leg of the IC that we would anticipate to be supportive. We are anticipating 5,900 to be that supportive level below us. Again, unless we have a significant risk off change or event, then below 5,900, all bets are off, and we'd be extremely cautious below that. Remember, we're starting from a place of weakness also in the market trend model, so we need to see that turn up. So a lot of things need to turn up to the upside for us to get bullish above the top leg of the IC. Again, anticipating most likely some choppiness and weakness as we start the overall day, and looking through the overall week as of now. Game plan, obviously, put dominated to start the day. I'll be watching the transitions at the open. Extremely important to stay above if you're bullish. And then we have the top of the IC. If we test the top of the IC and get rejected, there's a possible opportunity for a short back down towards that 6,000 level, obviously within the overall drunken sailor range and transitions. And then for below transition and drunken sailor range, we'd be full short for a move and weakness down towards the gradients of 59.40, 59.30, and then down towards 59.20. And then ultimately 5,900 would be that area that we'd look for a supportive type action. Net stack command, this gives us our highest sensitivity strikes. Obviously 6,000 round number, extremely important. And sensitive, you'll note in the money calls here, out of the money calls at 60.25 and 60.50. Again, upper leg of the IC is 60.35 and 60.40. This is for spot price when we're at 60.16, so we'll continue to watch the overall pre-market spot price to see if it's moving up and down the complex. We'll take a look at that. So 60.15 there. So basically our game plan would hold true. We'd be slightly above the transition to open. 60.20 would be that first area from a TA standpoint and an overall options look that we need to get over. And then we'd be looking at the top of the IC again for overall stalling and consolidation. And if we get above 60.25, 60.30, we'd be looking for that 60.50 level, which would match that upper strike, right-hand plane, net charm, gamma, and Vanna on the overall net stack command, which is the highest sensitivity strike. So again, quick takeaway for today, the 30-second summary would be market trend model showed some weakness into Friday, as denoted by here. We're heading into a structure that is put dominated at the open, even though we'll be opening above transitions. We have a asymmetric IC that most likely will contain price unless we see a significant amount of out of the money call speculation via our vol M command. And they'll be looking for 60.50, most likely some choppiness within this overall drunken sailor and transition range. And then if we're below the bottom of the drunken sailor range, we'd be looking for weakness and risk off in the overall market. That would be confluence with our MTM and vol M command for a move down towards these gradients through 59.40, 59.25, and 5900. So hopefully that helps everybody to set their trading plan for today. Again, obviously a significant amount of volatility coming into the overall market on Friday. Most likely we'll probably had a little bit elevated volatility heading into today until we see the book clear and just get some overall positioning. So be patient, wait for the opening range. Let's get our data updated, and we'll see where we're at within the overall structure as well as sentiment, and then we'll look intraday with our vol M command to see how market participants are positioning. So hopefully everybody has a great day. I'll hang around for a few more minutes. If anybody has any questions, let us know. But again, put dominated, market trend model down, increased volatility, so we'd lean towards a little bit more cautious and have a significant amount of patience at the open this morning. So thanks everybody for joining us. Again, if anybody has any questions, I'll be hanging around for a few minutes. All right, thanks everybody for joining us. We'll see you later. Thanks.